Hey guys, it's Will here. I'm going to go through the markets and some sector ETFs as usual. I'm using TC2000 here. If you want to pick up a free trial or a purchase, you could get $25 off in the description below in the video. There's a link there. I've got the gold plan and I use real-time US stock data. And so if you notice my past videos for the past couple of weeks, I've been hesitant about the markets. I've been sort of negative, and obviously it started with this flat momentum here and a bit of this pullback. We can see here that we've got a downtrend. We've got lower highs established here. So over here on TC2000, there's this little drawing board. You can palette. I mean, you can draw lines, horizontal lines, so you can see. Now you're still above the 50 here. But when I look at the momentum, which is the MACD, or what I use as price percent oscillator, I look at the price percent oscillator in a few ways. One is the light blue line, like if it's in an uptrend or a downtrend, and if it's crossed over the moving average. So this would be the uptrend here, which correlates to this nice run here. The other thing is the zero line. So when you're above zero, it's strong. So sometimes when you're below zero, it might come up and then it'll go back down. Like it won't get up above the zero line. So you can try to get an early entry, but a lot of times when it's below zero, it doesn't sustain that. But right now you can see that we came close and then we kind of bounced off it. So the momentum isn't great. Down, lower highs, but you're still above the 50, but I don't like that look right now. If we look at the S&P, it's a little bit better, but you're above the 50. You're still above these volatility stops. So I use these green volatility stops that takes into account average true range. So, and you can adjust how sensitive it is, but when you're above these green dots, you usually have, it's at least a potential to be in the trade. But if you look at the momentum, you are above zero, the PPO, and it's crossed, but it's really flat right here, and you sort of have this double top. You have like it kind of hit the peak and then it bounced. If I draw a horizontal line, you can see that we hit this point, came down. So, I don't really like, things like that, but, generally it hasn't completely crapped out yet, but, I do get concerned when one market like NASDAQ, even though, it could be a shift in sentiment, you have all this stuff out there like the inflation, bond purchases, tapering and all that stuff. Dow Jones is looking decent, a similar situation. It did break this pullback and it's broken up above. It's above the green volatility stops, a little bit of a pullback here. We did cross over in momentum and it is just above zero. So it's not the worst chart right now. But obviously there's a lot of concern in the market, and also the volatility where it's up and down, the emotion, isn't a great time if you're going to try to trade when you have a nice long uptrend or, somewhat long uptrend. This is a bit of a dicey period. And then the worst one of the bunch is IWM. So I talked about this before, but we had this really up and down volatile flat period. If I go back, it's even worse right here where you had a big run, then a complete flat consolidation period. So then what I did was I started to draw this wedge sort of thing, pattern. And then once it breaks out of that wedge, it was a really good sign. You finally broke out. Although, if you draw a horizontal line, it did break out briefly from the horizontal trend support or resistance line. But when you draw this wedge, you get this breakout here, and it wasn't long lasting. And you can see here that you broke down, the momentum came down. And now It did come back close to the line, but then it kept going. So you don't want to try to anticipate, like as soon as you see it curling up, people try to buy right here. You could do that, but you've got resistance from these averages, moving averages, and also other price points in the past. But you didn't even break it. This moving average was downtrending. So this can help you stay out of these short little spikes here. If you're patient and you have rules, like you're not going to buy unless it crosses up or it's above the 0 point. What I was getting at back in the earlier part of the video was see these like upward trends in the momentum and the crosses, but you're still below 0. So that can keep you out of some of these bumps. Or if it's like you say, it's below the 50-day, I don't want to get involved. There's a lot of ways to look at these things. So overall, I continue not to be liking these markets. But like I said, with some of them, you are still above the 50 and everything, but it's, I look at all the markets together. So let's see, if I go to sectors, this is in the United States. I'm in the pre-market right now. So you can see up here on TC2000, it shows you pre-market. So that's a nice feature. I can see, actually down here, you'll see 734. So I can see pre-market activity and post-market as well. So if you want to get TC2000, I highly recommend it. I use it all the time. It's there's a trial and a $25 off link in the description below. Help support my channel. I get a little commission and it doesn't cost you anything anymore to do that. So what I have is I do scans. I have different tabs here, and I've built scans and then in the columns you can put like the slope. If you want to sort by slope, which is like kind of the momentum, instead of price change, you can go like that. And you'll see that the consumer staples ETF is very steep. And obviously, you want to get that. So what I do is I've talked about this before, but if I look at something that I really like, oh, I wish I would have got in earlier, I kind of look and see, well, what would have triggered me to buy? What would have got me into the trade? And obviously, you have the green volatility stops. You have this break, cross back up over the 50. You have the momentum cross. So if you're looking here, that could be a spot. But sometimes the first breakthrough doesn't really last. So you can look for a bit of a consolidation and then a rise. So you get in a bit later. Or you might get like a secondary low, like right here, before you just jump right in. And in order to do that, I have a scan I call first green V stop. So that means basically when it switches from red to green. So that's when the volatility stop crosses over, they call it, from red to green. So if I click on scan and I go like this, there's this price history is above the V stop. But that just means it's green. So it doesn't mean that it just crossed over. So if you click on this condition here and you go down here, it says crossing up volatility stop. It's not 100% perfect, but if you do that, nothing shows up. So what happens then is, so you have nothing that's just crossing up, and it might be because I'm in the pre-market, but what you can do instead of saying now, this is really interesting, you can say within the last 5 bars, and that's a bit much. So I'll say 3. And that'll find the crossovers within the last 5 bars. So then you can see here, like it did cross, it did go from red to green back there. So it gives you, some stock ETFs or stocks that you might want to get into at some point. Of course, just because it's switched to green, it's underneath the 50, it's kind of bounced off as resistance. So I wouldn't necessarily want to get this one. And I look at the momentum, and you can add more criteria. Like you could add a criteria that says it's above the 50 if you want, and then you wouldn't even see some of those. But That's the early flip of the green to red. So if we look at yesterday, you can see things that are doing better than others. And, it's not just it doesn't mean that you should just jump into these because they're up one day. Some of this is pre-market. So I'm going to turn off right now. I'm going to go back to the regular market just so I can see what happened yesterday. And you can see that TLT, which is the 20-year Treasury bonds, has been doing decent as well. I don't really like buying bonds, but you can see like we've kind of got this uptrend here. But right now, like there's the red volatility stops, but there is a bit of a breakout here. So that's going to mean, oftentimes that means the market goes the opposite direction as the bonds. So what I notice, what I'll do is I'll look at the general type of stocks that are doing, or ETF sectors that are doing well at a particular time. So you'll notice that you have home builders, you have staples, which is like the food, probably because of inflation, all the consumer stuff. And just a side note, I mentioned this many times, but the great thing about TC2000 is when you're looking at this ETF, you can click here on component watch list and you get all the stocks in staples. And Costco is unbelievable. Like this is the dream chart in terms of just a beautiful uptrend, low volatility. You could basically ride it up, pick your method. The green volatility stops, you could ride them from here to here, get a nice swing trade. Constellation brands. You got your Pepsi and all that stuff. That's doing really well. So these stocks are doing, if you want to buy individual stocks, you can see these are like defensive stocks. It says right here, consumer defensive sector. Actually, if you want to look at specifically consumer sector, consumer defensive, you can click on this SX50 and then you'll be able to see all those stocks. And so this is household and personal products. Let's see, what do we have? Napa. So you can go through, the individual stocks. Sam, that's the beer. So beer has taken a huge hit, and you can see a little bit of a breakout above the 50 here. That's actually technical analysis. That looks pretty good. I don't know a lot about that stock, but so these don't look great. Some of the stocks in terms of the chart, but like Coke is good, I think. Well, it's breaking out here. It's gone up quite vertical, but so that's the staples one. You'll notice utilities is doing well, and that's the safety plays. So you have it's right at the resistance. Well, it wouldn't be probably the best time to buy right when it's at the peak, but when you get this first little break here, there's a bit of a trade there, but that this is picking up in. There's a hedge. That's not great, I guess. I noticed also healthcare. So this one looks pretty good. You had a pretty nice run, but after this pullback here, so you can draw a line, and you can put a alert. If you right click on this line, you can say set alert, and then you can say it'll say when it crosses it. Or you can put an alert at a price or at a moving average cross, whatever you want. Or you can just scan, like whenever you're scanning for, like say this is in the red zone here. You could scan for it to switch to green, like I said, with the crossing the V-stop, and that would catch this. Or you could do price percent oscillator crossing. You could do stochastics rising or at a certain point. There's lots of ways to identify possible situations. So what you do is you look at where you might have bought, like even though this is underneath the 50, you might want it to buy when it turned green. So the first green stop, But if you look down here, it just recently crossed the momentum at a fairly low point. So, you know, it's a riskier area. It's a low momentum area, but that's a cross of the momentum. You have things like this 8 EMA. This is an 8 EMA black line. You could say when it closes above the 8 EMA, which would be an alert. So if you go up here where you see 8, set alert. And then you have all sorts of unbelievable scenarios that you can work with if you want to, or you can have when moving averages cross each other. I mean, there's all sorts of things. So I think that's good enough for today. You know, there's Fed meetings and announcements and inflation issues right now, and the markets aren't looking great. So I don't personally, it's not a great time to be trading, in my opinion. But mostly I try to base it on, you know, what the chart looks like. And if I were to buy, if I were to buy NASDAQ, I'd probably want to see, you know, green candles and this crossing back up and a bit better slope on this, like on the price, on the MACD, you know, momentum. That's kind of where I focus, mostly on the tech type stuff. And so, you know, we're in a bit of a weird situation right now, so I just hold off myself. Hope that helps you guys, and we'll talk to you in the next video.